Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, educational language. I'm your host at Algobot, and today we're exploring an expert advisor called Engulfing Pivot Shield. This is a pure price action strategy. It uses no traditional indicators at all. Instead, it reads engulfing candlestick patterns around rolling pivot levels, and it protects every position with an opposite stop order it calls a shield. By the end of this video, you'll understand how it spots setups, how it manages risk, and how the code behind it actually works. Let's get started. So what exactly does Engulfing Pivot Shield do? At its core, this expert advisor is a short-term, price-action approach for MetaTrader 5. It can be applied to many symbols and time frames, though traders often study it on major foreign exchange pairs like Euro to US dollar. The defining feature is that it relies on no indicators whatsoever. There are no moving averages, no oscillators, nothing layered on top of the chart. Everything it does is derived directly from raw candle prices. The strategy builds a rolling pivot frame on every new bar. Using a look-back window, 20 bars by default, it finds the highest high and the lowest low, combines them with the most recent close, and calculates three reference levels: a central pivot, a resistance level called R1, and a support level called S1. These levels shift as the market moves, so the map of support and resistance is always current. On top of that frame, the expert advisor watches for engulfing candles, where one candle's body completely covers the previous candle's body. When an engulfing candle interacts with one of those pivot levels, the strategy classifies the situation as either a reversal or a breakout, and it positions accordingly. What makes this approach distinctive is the shield. Every time it opens a trade, it can also park an opposite stop order at the protective stop price. If the original idea fails and price runs against it, that stop order activates, closing the losing trade and opening a continuation trade in the new direction to try to recover. Who is this style suited for from an educational standpoint? It's aimed at traders who are curious about systematic price action logic and hedging mechanics, and who want to study how rules-based entries, stops, and targets fit together. Remember, this is educational information only, not financial advice, and all trading carries the risk of loss. Let's walk through the exact logic, step by step. First, the expert advisor only acts once per freshly closed bar. On each new bar, it checks that it has enough history. Then it cleans up any leftover orders before looking for a fresh setup. Importantly, it only hunts for a new trade when it is completely flat, with no open positions and no pending orders. Next, it rebuilds the pivot frame. It scans the look-back window for the highest high and the lowest low, then computes the pivot as the average of that high, that low, and the last closed candle's close. From the pivot, it derives resistance R1 and support S1 by reflecting the range around the pivot. Then it examines the last two closed candles for an engulfing pattern. A bullish engulfing needs the prior candle to be bearish and the latest candle to be bullish, with the latest body fully covering the prior body. A bearish engulfing is the mirror image. Now the strategy decides the setup type using a proximity threshold, sized as a fraction of the engulfing candle's own range, 60% by default. For a long, it signals a reversal when a bullish engulfing tags support or the pivot from below and closes back above it. Alternatively, it signals a breakout when a bullish engulfing closes decisively above resistance R1, beyond the threshold. The short side is the exact mirror. A bearish engulfing tagging resistance or the pivot from above and closing back below, or a bearish engulfing closing decisively below support. If both a long and a short appear to qualify, or neither does, the expert advisor stands aside. It only acts when the direction is unambiguous. Once a direction is confirmed, sizing comes entirely from the engulfing candle. For a long, the stop loss is placed just below that candle's low, padded by a buffer, 25% of the range by default. The distance from entry to stop becomes the risk, and the take profit is set at that risk multiplied by the reward ratio, 1.5 by default. For a short, the stop sits just above the candle's high, with the same reward math applied downward. Finally, the shield. When hedging is enabled, the expert advisor parks an opposite stop order right at the main trade stop price. If the stop is run, the original trade closes and the continuation trade opens automatically. When the main trade instead reaches its target, the expert advisor cancels the unused shield, so it returns cleanly to flat. Let's look at the MQL5 code as it appears in Meta Editor. At the top are the input parameters. PivotLookback, defaulting to 20, sets the window for the pivot calculation. ProximityFactor, at 0.6, controls how close a candle must come to a level to count as tagging it. Stop buffer factor, at 0.25, pads the stop beyond the candle. TpRewardRatio, at 1.5, sets the reward relative to risk. Lots is the trade size, and hedge enabled, set to 1, turns the shield on. Below that you can see the engulfing detection. The bull engulf boolean confirms a bearish prior candle, a bullish latest candle, and a body that fully covers the previous one. The bear engulf boolean is the mirror. Now look at the long block. The Revlon condition is met when a bullish engulfing closes back above support or the pivot while tagging it from below, and BRK long is met on a decisive close above resistance. When go long is true, the entry is taken at the ask, the stop loss is the engulfing candle's low minus the buffer, and the take profit is the entry plus the risk times the reward ratio. That goes into the trade.buy call you see on screen. The short block is its mirror. The rev short condition is met when a bearish engulfing closes back below resistance or the pivot, and BRK short on a decisive close below support. When go short is true, the entry is at the bid, the stop loss is the candle's high plus the buffer, and the take profit is the entry minus the risk times the reward ratio, passed into the trade.sell call. Both sides share the same clean, symmetric logic. Let's bring this to life on the chart. Across the screen you can see 3 dashed horizontal lines from the rolling pivot frame. Support S1 down at 1.0830, the central pivot at 1.0865, and resistance are 1 up at 1.0900. These are the levels the strategy measures every candle against. Watch the opening candles on the left. Price is drifting lower, candle after candle, easing down from the pivot toward the support line. The third and fourth candles continue that slide, and the market presses right down into support S1 at 1.0830. Notice the small bearish candle that pokes into that area. That's the candle about to be engulfed. Now the key moment for the long. The very next candle opens lower but then reverses hard, closing strongly bullish. Its body completely covers the prior candle's body. That's our bullish engulfing pattern. Crucially, its lower wick tags support S1 from below, yet it closes back above the line. This is exactly the reversal off support condition the strategy looks for, and you can see the buy entry marker appear right at that candle's close. The stop loss would sit just below the engulfing candle's low, beneath the support line, and the take profit is projected upward at 1.5 times that risk. Follow what happens next. Price lifts off support and begins to climb. The following candles print higher highs and higher lows, a clean staircase upward, carrying price back through the pivot at 1.0865 and continuing toward resistance. A few candles later, the move reaches the projected target, and the take profit marker appears near resistance, R1 at 1.0900. The long trade is complete, and the expert advisor returns to flat, canceling any unused shield order. Now the chart sets up the mirror image, a short. Price is now pressing into resistance, R1 at 1.0900. A bullish candle pushes up and tags the line, and that's the candle that will be engulfed this time. The next candle opens higher, near the top of that move, but sellers take over and it closes firmly bearish, its body swallowing the prior candle. Its upper wick tags resistance R1 from above while the close drops back below the line. That's the reversal off resistance condition, and the sell entry marker appears at that candle's close. Here the stop loss would sit just above the engulfing candle's high, above resistance, and the take profit projects downward at the same 1.5 reward to risk multiple. From there, momentum shifts down. Candle by candle, price rolls over and slides away from resistance, stepping down through the pivot once again and heading toward support. After a few bearish candles, price reaches the downside target and the take profit marker appears. The short trade closes, and the expert advisor is flat once more. Notice the symmetry across the whole sequence. In both directions, the strategy waited for an engulfing candle to interact with a pivot level, confirmed the close on the correct side, anchored its stop to the candle that produced the signal, and projected its target using the fixed reward-to-risk ratio. If price had instead run against either entry, the Park Shield order would have activated, closing the losing trade and opening a continuation in the new direction. This candle-by-candle discipline, pattern, level, stop, target, and shield is the heart of how Engulfing Pivot Shield is designed to operate. And again, this is an illustration for educational purposes. Real markets are noisier, and losses are a normal part of trading. And that brings us to the end of our breakdown of Engulfing Pivot Shield. Today we covered how this pure price action expert advisor builds its rolling pivot frame, how it reads engulfing candles to classify reversals and breakouts, how it sizes its stops and targets from the signal candle itself, and how its protective shield order works as a built-in hedge. We then walk through both a long and a short example, candle by candle, and read the core MQL5 code behind it. Remember, everything here is educational information only, and not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to examine next, and subscribe for more MetaTrader 5 strategy breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.